Well, hello, everyone. It is August 1st, and I want to bring you the latest data here in the Austin metro area. We're going to start with some breaking news. Mortgage rates have now gotten to their lowest point that we've had for 2024. This just happened today, but it's part of a trend we've seen that started a little bit earlier in July. Right now, if we look at the 30-year fixed rate, this is on Mortgage News Daily. Kind of the par rate's about 6.62%. For reference, our high this year was around 7.5%, which I'll show you here in a minute. But VA, FHA, we're seeing now low sixes on mortgage rates. So they are coming down. They've reached a long-term low for 2024 after the Fed announcement. They did not raise rates at the end of July, but they are pretty much implying they're about to lower their federal funds rate starting in September. Let's come down to the chart. This is the 30-year fixed mortgage rates for all of 2024. So if we go back to the beginning of the year, last year in 2023, we peaked in October around 8%. It was brutal. They were super high, really just took buyers out of the market. But from October down to the beginning of the year, we dropped back to about 6.7%. And we had a pretty nice first 2 or 3 months of the year. January, February, March, there was buyer activity. There was kind of some new enthusiasm. We had some pretty full open houses. But then rates started going back up again. By the time we got to mid-February, they were poking around 7%. And we weren't sure if that was going to be the high. And then they really threw cold water when they launched up to 7.5% in April. And that's typically when the market wants to be at its most excited. You've got the most sellers coming to the market. You have the most buyers shopping, and they just threw cold water on the market with the high rates. Rates stayed really high through April, through May, kind of thought we were coming down, false start, jumped back up to 7.3 in May, bounced around 7% all the way until the beginning of this month. And then finally, there's enough economic data coming out showing that, yes, the economy is slowing down some, at least in terms of jobs, in terms of core inflation. And on top of that, the Fed is hinting as best that they can that there are some rate cuts coming later this year. So since then, the bond market has really softened. And what we're seeing is rates have come down today to 6.62%. So that is good news for buyers. It's good news long term, I think, for sellers as well, or for any of our buyers, including myself, who paid over 7% on a mortgage in the last few years to buy a property. There's going to be some refinancing that may come back to the market. Okay, so that's rates today. Let's go back. We're going to look at June data. This is the last full month of data that we have. So this is looking at all the MLS areas in Austin. This is 5 counties. We're going to focus on the big 3. And this is going to show you where those high interest rates from the spring through most of the summer have affected sales. So number of sales, we're the orange line here. The dark purpley blue line is 2022, and the light blue is 2023. So that's going to show you kind of where we rank in the last few years. We're lower. We've had much fewer sales. And we've also seen lower sales volume. That's if you add up all the price. We're at the lowest sales volume we've had since 2020. That's the green line. If I look at median sales price, we had been trending fairly tightly in the spring months with 2021 and 2023. And now we're seeing that dip a little bit. And again, suppressed activity, more inventory is helping reduce that price a little bit. We've been in a range for about 3 years between 420 and 480. And I think we're staying in that range. Our median home value right now is about 450. If I look at the average sales price, same story, seeing that soften a bit. Here's why. When you keep these rates going high, the listings just keep stacking up. There isn't enough buyer demand to eat up all the supply that is in the market. And that supply is made up of not only resale homes, but you have all the new home builders that are adding that supply to the market. And then, of course, months of inventory. But this is June. We've already completed July. We're starting August, and I'll show you where we are on inventory here in a few minutes. Let's look at Williamson County. That's to the north. These charts are going to be very similar. Again, seeing sales volume Number of sales drop off, sales volume drop off. Median sales price just a little below where we were those 2 years before. Average sales price kind of in the middle, still hanging in there. Total listings, again, it's an inventory story. We're seeing more inventory, months of inventory at its highest point we've had in those 5 years. Here's Travis. This is Austin and all these surrounding Travis County communities. Again, seeing a big drop off as we entered into the summer of sales. Sales volume is down, median sales price down a little bit, average sales price down a little bit. Total listings, there you go. So inventory, months of inventory driving that up. But we are starting to peak on that. I'll show that to you in a minute. And finally, Hays County to the south. Again, they actually had a pretty good spring in terms of sales activity, even more than during the pandemic. Why? Lots and lots of new construction. So that's helped them. But of course, still had a drop off. Sales volume coming down. And I think this is a tale reflective of when rates launched up in April. And so what happens is when you launch those rates up, all of a sudden buyers are like, I'm out. And so it really cut down on sales. Median sales price a little bit below where we were last year at this time, and average sales price kind of right in line there. And again, Hays County, higher on listings. All right, so where are we today? Let's look at this in real time. This is the number of active versus sold listings. Green are the active single family homes on the market right now in the Austin MLS. And so this is where we peaked out last year. We had about 11,500 homes. This year, we got up to 13,500 homes, but it is starting to come down. Right now, we're sitting around 13, but you can start to see the bell curve. I think we've peaked out on listings for this year. What we're watching is closed sales. That's the blue line. And you can see it's been really anemic. Is way below where we have listings, of course. That's why we have months and months of inventory. So when you have about 5 months of inventory, that means about 20% of the properties are going to get a contract in a given month. And so that means 80% of sellers don't. And here they are, sitting in the active inventory pool. But as we get into the second half of the year, especially as we get near September, typically you're going to have fewer listings coming to market, fewer people trying to sell their homes. You do have some buyers that'll come back to the market in the fall. Now that they're off vacation, their kids are back in school, you'll feel a pickup as we get into September. But typically you're not going to have as many properties for sale. And a lot of the sellers, maybe they don't get a contract. They take that house back off the market, or they put it up for lease and they get a tenant to move it off the market. So I think we're reaching that phase where we're going to start to see stuff, even if it doesn't sell, start to pull itself off the market. But we really want to see if these lowering rates are going to add any kind of buyer activity in the fall. We haven't felt it yet. But again, it's August. This is typically kind of a slow window in the year as people finish up their travel. But we'll see if the low rates start to kick in with buyers as we move into the fall. Finally, this is looking at the last 2 full years, all the way back to the very end of the pandemic high, right before they started raising rates in March and April of 2022. So the green is where sellers originally started their list prices. And this is the market, not an individual house. But green is where sellers have been trying to start. The blue is where homes are actually selling. And what you're looking for is, are those tight or is there a big gap? And so if we look at the end, or I should say the spring of 2022, everything was skyrocketing up in price. And so were the sales. You can see the blue line also skyrocketing up in price. Of course, rates really just hit the wall when we got to May and June of 2022. And boom, we immediately turned the corner, started going back down. Sellers were kind of fighting it on the way down. I don't blame them. It's hard to know what was going on back then, but we had a really stiff fall in sold median price. We went from 550 down to 429 in about 8 months. So there's the fall. If everybody wanted to know, did Austin crash? Is it going to crash? It's right there in the chart. But when we got to the spring of 2023, you can see there was some rebound. We had some buyers come back out to the market, started buying again. Typically, if we're going to see the price go up in the market, it's going to go up in the spring. It did, but of course, the sellers were way off on their list price. Lots of unrealistic prices, or sellers hoping that maybe this one little downturn was it and they could go back to listing high. They couldn't. And so you see that gap come back as sellers had to spend the rest of last year, starting in really March to December. They spent lowering prices last year. A lot of what buyers and sellers see in the market is not the closed sales price. What they see is the reduction of the list price. That's the green lines. And so we're seeing a lot of that in the market. But prices peaked out last year in June, and then they went back down. I think we hit our low in November of last year around 419. From November of last year up until about April of this year, it went back up to 455. And now we're just kind of hovering. We're about 447 right now. Yes, the sales price is softening a little bit, but look at the green lines. What you're seeing is, again, the list prices are the things that are having to more aggressively make adjustments as sellers try to figure out where they should list their house. And so it's a tricky balance. But I would say if you are a seller, it is better to be conservative. It is better to list a little lower. It is better to list a little below the comps, because ultimately buyers are writing below list price. On average in the market, I think the average transaction is closing about 5% below list price, the average. Some are selling at list price. Some might sell 10% below list price, but the average is 5% below list price. So if you know that, as a seller, you have the opportunity to maybe be a little more conservative, get a little more aggressive with your list price on the downside, and you may be able to sell that house a lot faster. If you are a buyer right now, it's hard to say what's going to happen this fall, but I will say you have some great tailwinds. You have lowering rates right now, the lowest rate we've seen for all of 2024. You still have a lot of inventory, but of course, we're starting to peak out on that. So if you really want to go see the most that you can in the market, now is the time to do that. We really don't know if lowering rates, A, will stick, and B, if it will spur some more buyer interest as we get into the fall. That's kind of maybe the only unknown at this point. And of course, if you're a seller, again, you're going to be competing with higher inventory for the rest of the year. So I wouldn't expect a big shift coming your direction, but hopefully lowering rates will get buyers to take action faster. Anyways, I hope this information is helpful. We'll be sharing this data each and every week. If you want to follow us, you can go to our YouTube channel at Ryan Kelly Group, click on that subscribe button. We'd love to have you. And of course, if you know somebody looking to buy, sell, or invest in Austin and wants to go deeper on this data and have a conversation with us, of course, we'd love to hear from them and would love your referrals. Until then, hey, we are in August. We are on the home stretch heading back to the school year. My kids are not excited for it. So I think they're hopefully going to enjoy the last few weeks of summer. Until then, check out more of our videos and we'll talk to you next week. Thanks.